Hey everyone, welcome to the Anarchy Podcast. 99% of traders will never make consistent profits. So why listen to the 99% of advice? On this show, we're going to challenge some of the most hallowed and repeated tenets of trading, and in doing so, set you up to succeed where others fail. Spoiler alert, we don't have a secret strategy or magic wand that will let you skip out on the hard work of learning the markets, but we can debunk viewpoints that are holding you back. If that sounds good to you, come join us.
Good afternoon, morning, evening. I guess I don't even know what time it is, but hello and welcome to the Anarchy Trading Podcast, everybody. We've been on a roll of hot takes recently, and one of those was last week was taking more trades, and these are all coming from Levi for the most part. Levi just keeps coming out with them, and this week Levi and I were talking a little bit, and he was telling me about a conversation that he'd been having with someone that he's been helping coach, and they got talking about strategies, and you know how we've always said, pick a strategy, stick to it. Well, as you do this more and more, things become more and more nuanced. And so today, that's what I'm hoping to discuss. So, Levi, how are you, sir?
I'm doing well. I'm in Hawaii right now, enjoying the
Living the
weather. It's
trader's
beautiful.
dream.
Yeah, it's great. My wife has got a nursing contract out here, so I've been out here for the last. I'm going to be out here for a few months, soaking up some rays. Yeah. So this one is kind of I don't know how much of a hot take it is, but this is we talk a ton, like you said, about keeping your strategy the same. I have just another side to that I think is going to be helpful to some of our listeners. I guess the flip side of the same coin. Yes, it's important to keep your strategy the same, but we've talked a lot about market cycles and how the market shifts and
Yep.
how the market moves.
Yep.
And we've experienced this ourselves. If anybody's traded for longer than 6 months, you'll have experienced this too, right? Where you're trading really well, really strong, and then something changes. The market is almost infinitely complex. Things start changing, and then the things that you used to do that worked don't work anymore. So, my take on this is that while it's important to keep your strategy consistent, it's also really important to leave enough wiggle room within your strategy to be able to be flexible within your strategy, to be able to change. Because if you can't change with the changing market, if your strategy, I think put a better way, if your strategy is so uh, precise that there's not a ton of wiggle room, then if the market changes, which it eventually will, you're not going to be able to adjust. And then you actually will have to change your strategy because it's just not working anymore. And this is pretty easy probably anybody who's traded for a long period of time has experienced this. If you've ever used an indicator, you've experienced this, like a trading signals indicator where it gives you a signal to buy or sell. It'll work
Mm.
great. It works great for 6 months. You have great back testing data, and then eventually it just stops working. It's like, oh, what happened? Well, the market changed, right? And so if you don't have enough wiggle room in your strategy to adjust within your strategy, then you're not going to be able to roll with the punches whenever the market does shift.
So I've got a question for you because again, that sounds great, but how do you know that you're shifting it to the market and not shifting it just because your brain is telling you to?
Yeah, this is a good question. So this is why it's important to have a strategy that it has to be two things at the same time. It has to ride the line between being precise enough that you know when you broke your strategy, because yes, strategy
Mm.
shifts. You win a couple bad trades that you shouldn't have taken. All of a sudden, you're trading differently. We've talked about that before. Strategy drift, about changing your strategy. Again, you don't want to change your strategy. You want to get used to trading the same stuff. So you need to have a strategy that is precise and concise enough that you can look back at your journal and go, okay, I should have not taken that trade, or that trade was good, right? You need to be able to frame your trading. A good, helpful way of knowing whether you have a strategy that is concise and precise enough is to go, hey, can I look back in my journal and say that did not follow my strategy or that did follow my strategy? If your strategy is, hey, just take a trade whenever I feel like it, well, then that's not concise and precise enough because you're just going to drift a million different ways. And you're not going to be able to go, you can't go back in your journal and go, okay, I shouldn't have taken that trade because there's no real way of knowing. On the other hand, you should have a strategy that is slightly loose enough to leave room for your intuition and leave room to go, okay, this is working. This isn't working anymore. This specific look, I should adjust. Much of it's not even conscious, most of it's subconscious. I'll give you a good example. Middle of last year, I tried a very simple strategy. Good, this is a kind of a good example, I think, of a strategy that is fairly loose enough to adjust. I just take a breakout and retest strategy. I look at just support and resistance levels, and whenever price breaks through, I sometimes take it, I sometimes don't. Right? Um, Now there's tons of wiggle room here, tons of room for intuition. So there's times like middle of last year where there was a specific look that I was winning like 75% of the time. It was a 1 to 2, and I would get this look, and it worked really consistently for like 6 months, and it was dope. And then almost overnight, it stopped working. Now, I just stopped taking that trade, and I started, kind of trading slightly different looks. They're all still breakout and retest. They still all fit within my strategy. But again, like we are, our kind of our main thesis statement on this podcast is day trading is feel based. It's not just a plug and play.
Yeah.
So my strategy is concise enough that I can explain why I took a trade, but also slightly vague enough to leave room for intuition and leave room for that your subconscious to adjust as trading and as the market changes. If that makes sense.
Yeah, that makes sense. And I think that was a good I was about to ask you and you answered it before I asked was what are you looking to change? Because it's great to just say, okay, we're changing my strategy, but what does that exactly look like? And yeah, I totally get where you're coming from. The other thing that you can do is also look about changing up time frames. Not a bunch, just a little bit. We're talking about if you're trading a 5 minute, try trading the 1 minute. Or if you're trading the 1 minute, 15 second. Or if you're trading this 15 second, go back to the 1 minute, right? Like there's some variability there. Like you don't have to be die hard set on either one of those because depending on your personality and the time frames, like some of those are going to work better for some people than others.
Yeah, and let me go. I briefly mentioned it, but it's worth hitting this a little bit harder, I think, is that because day trading is feel based, in other words, professional, good, profitable day traders, they're profitable because they've gained an intuition. Day trading is not feel based, is not just plug and play. So when I say you want to leave room within your strategy to adjust, a lot of that adjustment isn't conscious. A lot of it's not like, okay, well, the example I gave was conscious. Okay, this look isn't working anymore. I'm going to stop taking those trades. Oftentimes, it's not. Um, my strategy is vague enough and reliant upon intuition so much so that as the market changes, my feel for what's going to work and what's not can change along with it,
Hmm.
right? The problem with having a strategy that is so precise and kind of plug and play is that you don't leave room for your intuition to adjust as it goes, right? I can't think of a great example off the top of my head, but I'm sure there are ones. As you know, let's say if you're a golfer, we go back to this well a lot, but if you're a golfer and the wind changes, right? Well, a lot of the time most of the time you're not hitting a golf ball with wind. But if you start feeling a headwind every time you go to the golf course, it's maybe not conscious, but you're going to hit the ball slightly different. You're going to push into the wind slightly to adjust. And so you want to leave enough room that your intuition and feel can kind of move along with the market as it changes, and cycles through its kind of 4-year cycle.
Yeah. And when it comes to that, you just have to remember that with each iteration, it's just again, it's not chasing the thing, it's being flexible and adaptable. And maybe that's not even changing. I think maybe instead of saying changing your trading strategy, it would be more saying adapting. I know it's a subtle change, but adapting
Yeah.
your trading strategy to meet that.
Yeah, and again, I'm still firmly on the side of don't be switching up your strategies, right? So if you're a guy who trades reversals, well, you shouldn't be now starting to trade continuation strategies. You shouldn't if you're a trend line guy, you shouldn't be switching up to try like ICT because you're bored and you're not do like I'm stick with a strategy, just make sure that strategy can be, I love your word, adaptable and allows enough room for you to change with the changing market.